Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice weekend so far. And in today's action, well, the bulls had a very nice bounce today. Although the rotation was good, we had some sectors like financials and healthcare lagging a bit behind, but that's okay. They've been really carrying the markets on their backs for the last few weeks, and now it's tech's turn to start to come back alive. After a lot of those companies got beat down after earnings, they're starting to have some very nice bounces overall. So the rotation overall was fairly decent, all things considered. In other news, we also have some more announcements from the Trump administration from Friday all the way through today. Friday, of course, the reason the markets dropped in the afternoon was because Trump announced that he was going to reciprocate any and all tariffs levied against the United States from other foreign nations, ranging anywhere between Europe all the way through Asia alike. And today, we also got more announcements that specifically he was going to do more tariffs on aluminum and steel. Now, we've had a lot of tariff news, of course, over the last few weeks, and it's brought in a lot of volatility, but in my humble opinion, as I've said many times on the channel, I think by the time the market comes to digest that the expectation will be tariffs moving forward, the news headlines will start to hit less and less. The most important times of the early Trump administration will be the first 30 to 60 days, while the markets start to digest any and all policies that will be incoming and set forth for the next few years of trade. But all in all, today, guys, was a fairly decent day of price action. So in today's video, we have a few things to cover together. Number one, we are going to cover briefly McDonald's earnings, and also take a very brief glance at Monday.com's earnings, and also earnings from ONSemi, which had a pretty steep drop recently. So we'll go over those earnings first. Number two, we're going to cover our technical analysis portion of the video, do a full rundown in terms of market rotation, how the SPY, the QQQ, and the minor sectors are doing amongst each other, and then take a look at technical analysis amongst our big tech names, which did have a very good bounce today. We'll see if there's still some very good deals to be had there as well. And lastly, we'll take a brief look at my portfolio for a few trades made today and the ones that I'm keeping for the rest of the week. So should be a fairly interesting one, guys. Let's jump right into it, shall we? So the SPY up about 0.68% today, the Q's up about 1.21, but financials and healthcare having a little bit of a down day. If we take a look at the sector rotation here, you'll see that all in all, the heat map was fairly good for the day overall, guys. Big tech was leading the charge. They've been kind of muted over the last week and a half of trade after the DeepSeek news, after their earnings and whatnot. They were kind of muted, but starting to come back a little bit today. Now, consumer defensives also did fairly well today, and we also had the bottom half of the market rotating up nicely as yields continue their slow march to the downside, the bottom half of the market starting to come alive. Now, the pain points today were financials and healthcare, but as I said in the intro, these sectors have largely been carrying the markets on their backs for the last 2-3 weeks of trade, so nice to see that when they choose to have a little bit of a healthy pullback, the rest of the market is really there to pick up the slack. So very decent rotation overall. You can see that even better on the one-day relative performance, where the whole market pretty much was green, led to the upside by energy, only healthcare and financials to the downside. Where do we stand on the 1 week? Well, overall, the markets are still positive, as the SPY is very, very close to its all-time highs. The only sectors down on the 1 week relative are healthcare, consumer cyclical, and communication services. Communication services largely led to the downside because of Google's earnings recently. So overall, guys, fairly decent day in the markets, but before getting into more technicals here, let us dive into some earnings. We're going to start off with the one that I will cover the most on, which will be McDonald's. The reason I'll spend about 5-6 minutes on McDonald's is because they are a hint into the consumer discretionary spending cycle. Are consumers starting to slightly recover, or are companies like McDonald's still struggling with sales? Well, let's have a look. So McDonald's today up almost 5%. However, their numbers weren't all that fantastic. However, they were less bad than anticipated. So moving on, they missed on EPS here by about 0.46, and they did miss on revenue here by about 1%. An ever so rare miss by McDonald's. They've missed in a few quarters recently because of consumer discretionary spending being down, but if I just pull this chart all the way back, you'll see the misses are very rare, and we're mostly surrounding the COVID cycle, and when they miss, they do not miss by a lot. McDonald's is a fantastic company, very high net margins, and obviously one of the most expansive companies all around the globe. So let's get into their earnings, shall we? McDonald's revenue disappoints as US sales see the worst drop since the pandemic. Now, these headlines, you have to take them with a grain of salt, guys. These headlines were also equally as negative for Microsoft, for Google, for a number of big tech earnings. You often see the words disappointing and worst, you know what I mean? But really it's to kind of drive eyes to the article, right? In all reality, they weren't that bad. We know that McDonald's and all restaurants largely have been slightly struggling as the consumer pulls back on spending from discretionary items, and we know that a trend recently in the last year and a half with the elevated prices and inflation has been the consumer has been cooking a lot more at home, right? Let's dive into these numbers and see truly how disappointing they were. So, they reported disappointing quarterly revenue dragged down by weaker than expected sales at its US restaurants following an E. coli outbreak just weeks into the quarter. If you guys remember, that's how Q4 started for McDonald's. Definitely was not good, and that was pretty much, if I can go back on the chart, that was the result of this drop here in leading into the early stages of October, right? So moving on further, shares of the company rose 5% as executives predicted sales would improve in 2025. And that's really what we want to focus on. We don't want to focus on what's happening this quarter or last quarter. We want to be focusing on the future. Are they able to improve sales in the future? And how do they see the status of the consumer right now? Arguably, the executives did guide for a very decent 2025. Now, net sales of $6.39 billion were roughly flat compared with the year-ago period. The company's overall same-store sales growth of 0.4% outperformed the expectations of declines of 1%, which was analyst consensus. So, at least they're growing, right? McDonald's U.S. business reported a steeper than expected drop, however, in its same-store sales. At the company's domestic restaurants, the sales fell 1.4%, and Wall Street was projecting only declines of 0.6%. So the U.S. market still a little bit soft, but we've heard that from many different brands to where the US market still remains slightly soft, but international is actually doing quite well. And McDonald's is the same. McDonald's said traffic was slightly positive, but consumers spent less than usual during the quarter. Over the summer, the chain rolled out a $5 combo meal to bring back price-conscious diners and reverse sluggish sales. The strategy worked, helping McDonald's U.S. same-store sales tick up in the third quarter. Very good, and that's been the case for 2 quarters now. McDonald's expects its U.S. sales to recover by the beginning of the second quarter, said the executives. Outside the U.S., sales were stronger. Both of McDonald's international divisions reported same-store sales increases, bolstering the company's overall performance. The company's international development licensed market segments, which include the Middle East and Japan, reported same-store sales growth of 4.1%. McDonald's international division, which includes some of its biggest markets, reported same-store sales growth of 0.1%. The company said most markets reported same-store sales increases. Now, there's a few exceptions like the UK, but for every exception to the downside, there is a positive exception as well, such as France, right? So internationally, the company's doing very well, but domestically, still a little bit soft, which is kind of in line with what we've been seeing from the US in terms of spending habits, at least over the last 12 months. Moving forward, looking to 2025, the first quarter is expected to be the low point for McDonald's in terms of same-store sales. Said the CFO, citing a weak start to the year in the U.S. among other factors. Winter storms and wildfires in California weighed on restaurant traffic across the industry in January. Definitely was not the best last few months for McDonald's. They got the E. coli, the LA fires, of course, the winter storms, not the best for foot traffic. For the full year, McDonald's plans to open roughly 2,200 restaurants. About a quarter of those locations will be in the U.S. and its international operated markets. The rest will be in its company's international development license markets, including about 1,000 new restaurants in China. So very solid, guys. As you see, McDonald's is a very strong company. They continue to expand, and they have done this dance before. McDonald's has been through much of the worst markets in recent history. If they can get through COVID, guys, they can get through this time period as well. You can see that this chart pretty much all the way since their IPO, other than a big recession such as the dot-com bubble bursting or later the 2008 recession, which is this tiny little drop right here, the company just does exceptionally well at developing into new markets, opening new stores, retaining customers, and overall, it is not new to this game, guys. It knows how to use promotions to its advantage to stimulate sales, and it knows how to retain its market share. The margins of this company are absolutely fantastic. That has to do with supply chain efficiency, but also the franchise model. We have to talk about that. Net margins are always usually in the high 20s or low 30 percentage points, and this quarter was truly no different, despite the weaker than expected sales. If you take a look at the fundamentals, guys, I mean, this is really a top quality business in terms of fundamentals. They ever so rarely miss on EPS, except for during COVID. EPS is largely up and to the right, although we have had a little bit of a blip because of inflation and consumer spending pullback. And revenue just continues increasing up and to the right, some years faster than other. But here, guys, is an example of a very, very long-lasting, high-quality business that I would not mind investing in at all. So McDonald's is right now at the all-time highs. Are they a good deal? Well, let's have a look. Revenue revenue is growing 5.3% per year through 2027, and EPS is growing 7.6% per year. Now, I forgot to replace this number. My bad, guys. I did do the valuations at 308, but I just didn't change the price right here. So all these valuations are indeed for a price of 308. The price to earnings ratio is 24.85. That's a little bit high. McDonald's traditionally trades around a 21, 22 on a terms of price to earnings, but I wouldn't say it's crazy high. Moving on to the PEG. Well, the PEG's not the best metric for McDonald's. Usually to use the PEG, which is price to earnings growth, you want to use that when EPS is growing over 10% per year. For a defensive and value-oriented company like McDonald's, you measure with free cash flow yield. It gives a much better expectation as to whether the company's cheap or expensive. And a free cash flow yield at 3.16% is not the best, but it's not the worst. Usually you look for a range between 2.5% to 5%. You want to be closer enough to 5%. At 3.16, I wouldn't say it's a tremendous deal, but I wouldn't say it's terrible either. And same thing for the price to earnings. So right now, like McDonald's, would I be a buyer? No. I think I've told you guys I wanted to be a buyer down here, 280 to 370, roughly about 10% lower, where the valuation makes a little bit more sense, and also where the technicals found a local bottom here. You can see that in terms of technicals, write this down. McDonald's on the monthly time frame. Whenever McDonald's pulls down to or below the 26 EMA on the monthly time frame, you'll see how many times it respects it. When you go through time, every single time it comes into or slightly below the 12 EMA, it is synonymous with being a very decent buying opportunity for McDonald's, and bulls usually step up. Right now, the chart looks beautiful, going for the monthly uptrend expansion, and the next step is going to be the all-time highs at 320. So would I be buying this company here for a swing trade? Possibly not, because it's not the best technical level. The technical level was about 2 short weeks ago, and it's also not the best valuation. But if I had this company in a long-term portfolio, do I see any reason to sell whatsoever? Absolutely not, guys. McDonald's, at the end of the day, is McDonald's. They're here to stay. Fantastic net margins, a very good business model, and I'd be very happy to keep this one in a long-term portfolio as well. So that's everything from McDonald's. Now, other noteworthy earnings that happened on the day was one like Monday.com. Monday.com had a phenomenal day to the upside. This is a software as a service company, enterprise resource software as a whole, enabling other companies to use Monday.com software to improve their business efficiency. Monday.com has been putting a lot of money into their AI, not only chatbot assistants replacing customer service agents, but also the voice AI assistants that they're developing as well. Take a look at some of these numbers because they were good. Now, I'm not going to go through the valuation. We're going to do this one very quickly because the valuation right now is a little bit rich. It's a $16 billion company, trading at roughly a 16 forward price to sales, which is a little bit high, right? They're just barely now coming into profitability. This quarter was a good profitable quarter, barely coming into net margin profitability, which is the normal life cycle of a tech company, right? They spend a lot of time not being profitable and then eventually do turn a profit so long as they have positive gross margins. And if we take a look at the positive gross margins, this is how you know whether or not a company is a good bet. When they're not net margin positive, guys, you have to really look at the gross margins. The product that they're selling, can they make a lot of money on it if they start scaling? And if you see right here, the gross margins for Monday.com, being a software company, are 90%. So as they scale up revenue, the cost of sales and marketing and administration stuff is going to take less and less of a percentage of the operating income. So it will drive more money to the bottom line. When I see anything above 80% gross margins for a SaaS company, you know that when they do scale, they will eventually be highly profitable. So keep that in mind. So very good showing from Monday.com. Just going through a brief set of numbers here. Take a look at the revenue beats here on fiscal year 2024. 33% year-over-year increase, fantastic overall. And the business highlights, guys, in terms of dollar retention and customer retention, net dollar retention for the year was 112%. Extremely fantastic. For customers over 50K in ARR, which is annual recurring revenue, or $100,000 in annual recurring revenue, the retention rate was equally high, 115, 116%, which is fantastic, right? So they announced the Digital Workforce, a team of AI agents designed to work around the clock, handling tasks such as analyzing project risks, unlocking stuck sales deals, and identifying recurring customer service issues. Overall, guys, it was a very good year for Monday.com. And if you can see their guidance here, they did guide for year-over-year growth for the first quarter of 26 to 27%. And that operating income is starting to move incrementally higher as they continue scaling revenue and come into profits. Operating income projection is 9 to 10%. All in all, guys, fantastic if you ask me. Free cash flow is about $300 million as well, so nice to see them bring some money to the bottom line. Overall, very good for the SaaS industry as a whole. It goes to show that these AI initiatives are starting to really pay dividends. And Monday.com, the executives did say on the call that for them, AI was an absolute game changer in being able to scale their business and being more efficient. So this is another beneficiary of AI. And I do believe that software as a service companies overall will truly stand to benefit from AI. So this one is an interesting play. I'm not in it myself. Would I be opposed to starting a position? It's a little bit rich, but I could start a bit of a feeler position. But, you know, the valuation right now is a little bit high. If we do pull back down here into the mid 200s, like 270, 260 somehow, that could be a decent bid. It's not my favorite company in SaaS. It's a very good company. I tend to go with more established companies such as Salesforce, but there's nothing wrong with this company overall. And now if you take a look at our third earnings here, which is ONSemi, I'm not going to go through the valuation metrics as well, but the company is down about $47. I'm just not going through them, guys, because as you can see, I'm kind of traveling right now and I got to get this video out as soon as possible. It's morning for me, but it's nighttime for you guys, right? So I got to get this one out as early as possible. I'll try to do it better in the next few videos here as I get just more in tune with doing shorter videos and whatnot. But overall, all you have to understand from ONSemi is the fact that you can divide the semiconductor landscape into two types of businesses right now. The ones that cater to data centers and the ones that do not. The ones that do not, they're tied up in consumer products. Think phones, think personal electronics devices, TVs, computers, laptops, iPads, stuff like that, right? And thereafter, they're also tied in heavily to the automobile segment because they manufacture a lot of chips and sensors for automobiles that use a ton of electronics nowadays. And unfortunately, those three markets, guys, phones, personal electronics, and autos have just been very slow over the past 2 years. And this is a question of pulled forward demand. I keep bringing this up. ONSemi is not ONSemi, guys. ONSemi, you can think of it as any other retail-facing semiconductor stock that has not been performing well recently. You can think of ONSemi as Micron, Texas Instruments, Qualcomm, and a host of other companies that their charts all look the same. They have not done anything in 2 years. Why? Well, it's the tough comparable numbers, right? You have a lot of pulled forward demand here after the pandemic when personal electronics, phones, and cars were cheap. Everybody bought them, and now the refresh cycle is very slow. Now, they are guiding for further growth in the second half of 2025, but the early portion of the year should be slow in terms of EPS expansion and also in terms of revenue. Look, you see the pull forward in revenue here because of the pandemic, cheap stuff, free money, everybody went and bought everything, and now that things are a bit more expensive, people are being cautious about their purchases, and they already have all the electronics and the cars that they bought 2 years ago. They're not looking to get new ones quite yet because of high interest rates and low disposable income. So the recovery story of the consumer-facing semiconductor stocks, I would say, is still roughly 4 or 5 months away. It does not mean that the market won't start front-running that recovery, but as of right now, for these types of stocks, I need to start to see weekly uptrends. It's the same thing for Micron. Micron will only start breaking out when you get a confirmed weekly uptrend. You have not had confirmed weekly uptrends on Micron here since the last 6-7 months. It's the same for Texas Instruments largely. It is the exact same for a company like Qualcomm. There's just no weekly uptrend, so you know the momentum is not there. You do not have the institutions bidding, and largely as well, retail, I wouldn't think, is very much attracted to these. They're more focused on stocks like NVIDIA, Broadcom, and a stock like TSMC, right? Those are the three semiconductor companies that I'm choosing to play. So ONSemi, these were the numbers. Unfortunately, they missed, not surprising, miss on revenue and miss on EPS, and the guidance was only for recovery in the second half of the year. Now, it is a decent enough deal down here. The company is relatively cheap and coming into big support, but I'm just not looking to play these guys. If I'm going to play semiconductors for the first half of 2025, I'm going to stay data center specific and go with my favorite companies in that niche, which are NVIDIA, Broadcom, and TSMC. I think they're much safer bets rather than trying to play what I like to call the beta plays, right? The follow-up plays to the NVIDIAs, the TSMs of the world. So I would just rather choose to do the other one. So those were a very brief recap. I know they're not in as much in detail. I know I didn't go over the valuations and fundamentals and update them for Q4. I'll do that in the future as we go through this earnings season. Other notable earnings for this week, guys, are going to be coming up tomorrow. Shopify and Coca-Cola. I'll do a more in-depth rundown of Shopify and Coca-Cola. You also have Super Micro, DoorDash, Lyft, other ones like that. S&P Global down here too. On Wednesday, we have Vertiv, Reddit, AppLovin, Robinhood, a lot of interesting ones. And Thursday, Datadog, Coinbase, Twilio, John Deere, DraftKings, Applied Materials, Airbnb, Palo Alto. So there's a ton of earnings, but we're kind of winding down earnings season. I'll try my best to cover 2 or 3 of these companies on any given day. And moving into the future, as I kind of get situated and get my time schedule down to upload these videos early, I'll do a better job at giving you guys more in-depth analysis for those earnings and more in-depth for, just the fundamentals on their own, right? But all in all, I think you guys get a good sense of where I'm trying to go with these earnings. So now that we're over the earnings, let us dive right into the second segment of our video, which is going to be the technical analysis. And we're going to start it off with the S&P, because the S&P is just chilling right now above the all-time highs. If you watch my top 5 options video, guys, I was saying that, we've been largely trapped at these all-time high levels now for how long? Since the early stage of December, guys. It's been almost 3 full months of the market doing absolutely nothing, very wide and very volatile ranges of consolidation. But right now we are sitting not too bad. We know we're in this very tight range of accumulation, and the bulls are trying to do one thing. They're trying to go for a new daily uptrend. So we will see if we can get it, guys. The higher lows are all the way down there. Right now, we are just trapped between pretty much the all-time high resistance. Below us, though, is some decent support. As you can see, all the moving averages are sitting right there. And support below is 600 down to about 595. So keep that in mind. We do have some support below us. But if you break down and flush the lows of last Monday, 591, that will be officially a daily downtrend, but the bulls on the higher time frames are working with a lot of space. Let's not get it twisted, right? Still just looking for a weekly higher low for possible further trend continuation, or trend expansion rather, because here was a weekly downtrend. The bulls got a nice engulfing move. They're trying desperately to set the higher lows and go for the trend change, but as of now, it can really break either direction. The tariff news will have a big impact on the markets this week if those are announced, of course. And as well, guys, we do have CPI on the Wednesday session. Pay special attention to that one. Probably the biggest day of the week. We know front and center is once again the cause for concern for inflation, especially due to the tariffs. So that is why this one is going to be very big. If it comes in hotter than expected, the markets will not like that, and we may just possibly once again revisit the lower end of the range and retest these support levels. We will tackle that when we get to it, but the rotation overall is fairly healthy, and I do not see any major red flags, especially not on the weekly timeframes, nor on the monthly timeframes either. Everything is looking quite adequate. If I was looking to bid the SPY, well, I'd have to buy it down by the lows, which is what I have been doing, not the SPY specifically, but when we start flushing the lows into these fear-driven days, whether it's DeepSeek, whether it's the Trump announcements for China, Mexico, and Canada, or anything else the market can throw at us, I am a net buyer in these markets. Moving on to the Qs right now. 1.21% to the upside. Same analysis, right? We know the Qs have been stuck in this very, very, very wide range of accumulation. If you include all the way since December, we really haven't done much of anything, right? That being said, it is not looking too bad. No major red flags, just encountering some resistance. And I was saying last night, I was saying every time, and even on the Thursday video, I was saying into Friday, right? I was saying into Thursday, I would not be surprised if there is something that happens on Friday, because every single time we pull into this zone, something happens, there is some news headline, and we just get shut right back down. Now, that's not a bad thing, because every time we come down here, I'm always going shopping for some of my favorite companies, and we made some very nice money in the last month buying these dips overall. And the analysis remains the same, right? Trying to go for the daily trend change, but if we cannot break through this resistance, well, we might just head right back to these lows, which at the current time support sits at about 515, down about 510 on the Qs. I am a decent buyer down here. That being said, to the upside, what you're really looking for here is a breakout, retest, and then run. That will really give you some good daily structure and some very interesting weekly structure as well. Because right now, on the weekly timeframes, guys, as you can see, I mean, it's not the cleanest, right? As you can see right now, it is a very wide range of accumulation overall for the bulls. So that being said, we are still constantly in search of the new weekly uptrend. This was a weekly downtrend, engulfing move. Higher lows are set. Now you're looking for the expansion. If we get beaten right back down here to the lower 500s, no problem at all. It's just going to go right back into some weekly consolidation. And I do not see any major red flags in the markets unless we break these lows down there, because that would be a reversal pattern. And then you would be looking at a big weekly downtrend and some form of monthly consolidation, which we do not have right now overall. Let me just move this text to the side because it's bothering me. So we do not have it. The monthly chart still looks very, very, very attractive, but just pay special attention. You can pull back to the 500 to 495 level if things really get heated to the downside in the markets. But overall, guys, it would just be a very healthy pullback to the tune of which we've gotten many before, right? These 1 to 2 month pullbacks are to be expected eventually. If we do get one into late February, early March, I wouldn't be surprised, but I would still be a buyer because the long-term prospects of the market are still looking good. I know a lot of people are calling for a recession, tariffs leading to record levels of inflation. I just personally don't see it, and the data doesn't reflect it right now either. So we will continue to be data dependent on the channel and continue to, when there's volatility, use my favorite strategy, which is just writing puts under the market on solid, very high quality companies at levels that we want to buy them on and not chasing the market to the upside and being overly greedy. Moving on to XLF right now. So XLF, as I was saying, starting a little bit of consolidation, but I mean, XLF guys have been one of the market leading bulls in terms of sectors. Look at this weekly expansion, a lot better than the SPY and the QQQs. So now that the bulls are getting a little bit tired, it's nice to see the QQQ bulls put, start to compensate and, pull a little bit of that slack back from the overall markets, or rather support the overall markets in the quest for the SPY's new all-time highs, right? That being said, daily uptrend is still underway, looking for a daily higher low for possible further trend continuation, right? The higher low is anything pretty much above 50.39. They are reacting from the 12 EMA, but if you pull back too much and go for the daily downtrend rollover, would it be that bad of a thing, guys? No, not really. The weekly is looking gorgeous. Look at this. Weekly downtrend, big weekly engulfing move. Any loss of the daily uptrend, like if you lose the daily like this, right? All you're really looking for here is a weekly higher low. And the weekly bulls are looking super strong. Anything at this point above these guys down here, $47 is just looking for a weekly higher low. If we do pull back, first line of defense on the weekly is the $50 mark at the 12 EMA. And a bit lower than that is the 49 to roughly 48.50 level of support, which is the 26 EMA, this orange line here. You can see in the last 2 years of bull market rally for financials, every time they've tested the 26 EMA, it has been a buying opportunity. So if you pull down here or even deeper, I still think it's a buying opportunity for further expansion. As the banks, we saw their earnings. They're doing very well. Guidance for 2025 is very good. And at the end of the day, it is a rate cutting cycle. So the banks will start to make a little bit more money as more loans come into play, as interest rates start coming down, and especially with Trump possibly relaxing regulations on US corporations and lowering tax rates overall, that could really be a good thing for more and more money to start moving through these banks. Moving on to XLV, healthcare. So healthcare as well. Healthcare has had a tremendous 5-6 week rally in a row while the Qs were doing absolutely nothing. Financials and healthcare were really carrying the markets on their back for the SPY. So now that these choose to consolidate a little bit, it's no problem at all. Pay special attention to a close below 145.25. Now that's important for two reasons. Not only is it the areas of your daily higher lows to continue this nice daily uptrend that we've been in for a very long time, right? Start all the way down there, looking for the daily uptrend continuation. However, if we currently still are rejected by this resistance box, which is 149 to 146, that is just a very long-standing area of resistance. You can see it back here. It's been problematic for the bulls every time we've been under it. And as well now, for the last few weeks, it has been resistance as well. So if the bulls are not able to mount above and break, and we just get a break to the downside into daily downtrend, is that big of a deal either for the XLV? No, not at all, guys. We would just be looking at that point for a weekly higher low for a possible daily uptrend recapture. And I say recapture because it was a weekly downtrend this entire time with the lower high, lower low, lower high, lower low cycle, right? And now you finally have a 100% engulfing move, and they're looking for a very famous pattern, guys, the cup and handle. And below the handle, we're looking at all the weekly moving averages. I would not be surprised if we do start maybe seeing something like this type of shape form up. So healthcare would just at that point be looking on any pullback on the weekly, higher low, anything pretty much above 136, higher low for possible further trend expansion and break above resistance. At that point, your weekly uptrend would be set, and you may even be looking for a little bit of monthly expansion as well. So overall, the bulls not looking too bad, guys. If I had to say so myself, they are actually looking very healthy. Moving on to the SMH right now. So SMH semiconductors, I mean, there's not much to see on this chart, guys. It is still trapped between a range. It's been this range for the last 6 months, right? So the overhead resistance stays put at 260 down to 250, and below support stays put at 230 down to about 220. Now, that being said, on the daily, the bulls are trying desperately to go for the daily trend change. We are almost there at 251 would be a daily trend change to the bulls. However, once again, where are we going? Well, we're into this resistance. So we can't really call it a win for the bulls until we get a weekly break and close above resistance. As of now, that's not happening. If we stay trapped in the range, I'll continue to play it in the same way I've been playing it for a very long time now, which is when we come down to these lows, I'm a big fan of writing short puts either on SMH as a whole or on my favorite companies, NVIDIA, TSM, and Broadcom on very nice dips. Big fan. Whenever there's a range of consolidation, I love writing options below the markets whenever we come to the lower end of the section here. So we will see if the bulls are able to mount together and continue this rally. If we get rejected, very simple, guys, we will just get stuck in the very same range. So semiconductors, slightly directionless right now. Moving into the Russell right now. So the Russell also just doing a whole lot of nothing for the last 2 weeks, right? Trapped in resistance right now, 230 down to about 225. That resistance is no joke. It's the same area of resistance from all the way back here in 2021. And the bulls so far still have not been able to break it at all. That being said, they're not looking too bad. I wouldn't say there's any major red flags, right? The lows are set. We lost the uptrend. This was daily downtrend. Nice engulfing recapture move by the bulls, but now they have to do everything from scratch. Higher lows need to be set and go for the daily uptrend break. I am not playing the Russell right here, guys. I'm not a big fan of buying things at resistance. I'd rather wait for one of the two following trades. Either a retest down here with some daily oversold conditions. I would possibly make a trend, or rather a trade attempt in the support box, which is roughly 215 down about 205. The 200-day EMA as well sits right around 216, 217, so it could be an interesting bid. You see it best on the weekly, right? This is a whole big level of support. It's been support and resistance here as well for a few times for the bulls, so I do want to be bidding perhaps in this area. The second type of trade that I'd be looking for is the good old breakout retest, trend continuation. Give me a break above resistance, retest resistance as support, and then run. This retest area could be a very juicy trade opportunity, but overall, I'm not a big fan of buying the Russell right here. Now, moving into the Dow Jones lastly, 0.38% to the upside. Not too bad of a day for the Dow, but similar to the financial sector and healthcare, this one had rallied tremendously off the lows, much more than SPY and QQQ in the last few weeks, of course. The daily higher lows are set right now at 43,900, and well, the bulls are trying to go for the higher low right now and go for the continuation of the daily uptrend because we've been range bound for a little bit. However, if we get a break to the downside, flushing the lows of last Monday, which are 43,009, we're going to be looking for a daily downtrend. Is it that big of a deal, guys? No. When in doubt, zoom out. You're just looking for a weekly higher low for possible further trend expansion. We had the weekly downtrend here, nice engulfing move, looking for the higher low and looking for the trend change to the bulls. Every time the Dow pulls between the 12 and the 26 EMA, look over the last 2 years worth of rally, guys. Every time it pulls between the 12 and the 26 in various locations, it has been a very decent buying proposition. So if the Dow Jones is something you like and you see it pull back for a higher low into that location, coupled with this green box of support right there, which is, I'll give you the levels, that green box is roughly 43.3 down to about 43,000. It would be a longer term buying opportunity in my humble opinion. So that's everything for our broad market rundown here in terms of the sector analysis. We can see that yields as well. We're not going to spend too much time on them, but yields, I mean, the daily downtrend is right now clear as day, right? Looking for the lower high, possibly for lower low continuation. I like the way yields are moving right now, but at the end of the day, we need to reverse this into a weekly downtrend. It's been a weekly uptrend now since Jerome Powell started cutting rates, and now we need to see that reverse if you want to see any big meaningful declines in the 20-year yields and the 10-year yields, because if not, we may just stay range bound here between 4.5 and 5%. So you want to see the bulls really start to lose some ground on the yields. Conversely, you want to see the bond bulls really start gaining some ground here and set a new weekly uptrend. The TLT bulls need to reclaim this 91 area, guys. Need to reclaim the 91. Give me a big engulfing move, set the higher low into support, and then we could be ready for a nice rally. That is on the weekly time frame. Could be a very interesting trade. I am a fan of buying bonds here, but I think, guys, you have to be more patient than maybe you anticipate. Bonds are not Palantir, right? It's not going to do this, especially not with tariff news and worries of more inflation. But rate cuts are coming. The rate cut cycle is now underway. So we can expect some bonds, but don't expect this, right? It's probably more going to be something like this, a slow but methodical grind higher. So if ever you're playing options, you may want to put a lot more time on those contracts than you usually would for a tech growth stock, right? That's just my humble opinion on that. Now, moving into crypto, well, crypto is still doing a whole lot of nothing. It's like semiconductors, right? We are now trapped between overhead resistance and below support. Overhead resistance 101, all the way down to about 98,000, which is right where we are right now. In terms of the daily time frame structure, well, it's a clear daily downtrend, but the bulls really aren't losing that much more ground. It's been pretty much barcoding flat here for the last 5-6 days of trade. So Bitcoin is going to be heavily dependent on really two things: expansion of the risk on trade as measured by some aspects of QQQ and the Russell. If the Qs and the Russell, guys, aren't smashing new all-time highs, then Bitcoin as part of the risk on trade is also not going to do the same thing. That being said, if we get rejected by resistance and continue this daily downtrend, where are we heading? Right back down to 91,000 to 88,000. All things considered, I think Bitcoin is holding up the levels quite nicely. On the weekly, you can see it is just really a very wide range of accumulation, kind of similar to something that we had back here. It is doing the exact same thing. I don't see any major red flags, but eventually the bulls will want to set a weekly uptrend and close a big weekly candle hard in the 105,000 range. Then you will know, okay, if we close a big green weekly candle into 105, that is probably where the bulls want to manifest the rally from. But you can see, since we've tried setting the higher lows and going for the breaks, there has been no weekly candle closes above the 105 region. That's what I'd be looking for myself specifically. The monthly is still looking great, no red flags. And for every single altcoin, whether it's Ethereum, Solana, Cardano, any altcoin on this list, Avalanche, Link, Litecoin, anything, guys, anything you're looking at, Bitcoin needs to rally first, gain a level, then you need to have some money flow into Ethereum, and only when the money flows into Ethereum and Ethereum gets a rally, then you will see the rallies in the altcoins. Pay special attention, as always, to the Bitcoin dominance chart. That is the one to watch. You can see Bitcoin dominance right now is at 52-week highs, so you're not going to see a rotation into ETH or the rest of the altcoin market as when this one is in a weekly uptrend. You need to see them get a weekly downtrend for altcoin season, and so far that's not the case. So if we had to rotate money, the first trade is Bitcoin longs. When we make profit on the Bitcoin longs, closing them 115, 120, 125K. Then we rotate the money into Ethereum. Then when Ethereum rallies, we make some money. Then we can choose to rotate it into the small caps, or rather the small cap coins, right? Or the altcoins, and maybe simultaneously. Like if I'm looking at, if Bitcoin rallies and ETH and the altcoins haven't rallied just yet, I could take some profits on Bitcoin. Maybe I roll, if I have like $2,000, maybe I put $1,000 into ETH, and then I start nibbling on the altcoins. I've already been nibbling on ETH and the altcoins. I really like buying ETH in these levels. I think it should do well, but just be a little bit more patient, guys, than you usually would, because overall right now, the market's just not very risk on, right? So that's everything for crypto and whatnot. Now let's move into our big tech names, shall we? All right, so taking a look at our big tech names real quick. So Apple pretty much just flat on the day. We're going to go through these quickly because not many levels have changed. So Apple coming into support down here, 225 to 215. If you get a break of last Monday's low, that would officially be a daily downtrend. You can see the bulls having a very tough time battling with this resistance area, 230 up to about 235. Not able to get through, but if we do flush these Monday lows, you're coming right down into support, right down to the 12 EMA. I'm a big fan of buying Apple only if we get a breakdown of support below here. If we come into 215, I might be willing to write 210 puts or 205s. I really want Apple in the lower 200s, guys, because right now the valuation is just a little bit too rich for me. Trading about a 3 peg. I know they're down from 244. You just have to remove almost 10% from that. So we're trading roughly still around a 3 peg, which is a bit too high for me, considering the fact that Apple's revenue growth has not been all that. Sure, their services division is doing fairly well. Their other divisions, such as Mac and iPad divisions, are doing well, but it's the phones, guys. The phones are not seeing the refresh cycles that we've been anticipating from Apple, and the rollout of Apple Intelligence has been somewhat underwhelming. So because of those factors, Apple, although still being a very solid, high-quality company, I just need to get the best possible price. And when you see weekly structure like this giving back all the momentum, it leads me to believe that Apple may just be a little bit more range bound than people are anticipating to start 2025. So as a result, I'll be waiting for the lows to make a play. If you want some upside trend continuation plays, well, you have to wait for the structure to permit that. We have to get the daily uptrend, mount above this resistance, use it as support, and then you try for the trade, right? The retest trade right here is a very good one because then you can set a stop loss here, and then your take profit targets, number one is here, and number two is all the way at the all-time high. So I'm a big fan of waiting for the correct price action structure to enter longs. But as of right now, we're just really range bound on Apple. Moving into AMD. So AMD, still kind of struggling here at the lows, but today 2.71% to the upside. Not the worst price action for AMD, but still relatively weak, right? We know that we still need to do a good job of getting a daily uptrend back. Give me a large daily engulfing move and recapture the daily uptrend. Only then can we start talking about the capacity of AMD to get some weekly expansion underway. We know this one is just a downtrend in everything. It's a monthly downtrend, as you can see, monthly downtrend. It is also a weekly downtrend at the same time. Been a very large weekly downtrend for the last few months, and a daily downtrend as well. So step number one for the bulls is use this support area where we're currently in right now, which is 115, let's call it, down to about $100. Use this support level, form a base of support, then give us a nice daily engulfing move, and then go for the trend change, and then we can start talking about the higher levels. As of right now, I'm still a fan of bidding AMD down here, but the way that I'm doing it is I'm selling puts under the market. I'm selling short puts around the $100 to $95 range because that is a valuation on AMD that I think is very fair. In or around the lower $100 range, we covered their earnings last week. Right? They are very, very cheap at a 0.57 peg, and they're expanding revenue and EPS very nicely with their data center segment. Are they NVIDIA? No. Will they ever catch NVIDIA and NVIDIA's ecosystem? No. But can they carve away 5-10% market share as there continues to be a very excessive demand for AI chips? Yes, absolutely. And I think fair value for AMD is 140. But don't take my word for it. I'm not trying to convince you to get into this stock. I'm just telling you how the price action looks and what I am planning to do with the stock. Overall, still a little bit weak, but I still do enjoy playing it down here. And I do believe AMD has been unfairly hit to the downside. I think we can see some decent recovery through 2025, but you might need to be a little bit patient. And if we're going for calls, I'm probably going to do June 2026 at minimum, because betting on a short-term recovery of this stock, you might end up being disappointed, just as everybody back here equally ended up being disappointed. Moving on to Amazon. Amazon, very strong day by Amazon, 1.74%, recovering a little bit of the earnings drop and respecting our support level below, which is 230 down to about 225. The bulls doing a great job of protecting those lows, right? So it was a nice daily uptrend, but unfortunately we lost the daily uptrend. So what the bulls have to do now is a two-step recovery process. Give me the daily uptrend back, and everything will be good. However, break through this support zone. Daily downtrend is underway. Would it be that bad of a thing? Not really. The weekly bulls are in absolute full domination mode right here on the weekly timeframes, as you can clearly see, and they're just looking for a higher low for further trend continuation. They've been riding the heck out of this 12 EMA for a better part of the last 6-7 months. And I don't think this time is any different, especially not with the guidance that Amazon gave us. They should be having a very good year as they continue expanding on their AI offerings. Advertising business was doing very good. Amazon Prime business was doing very good. And the e-commerce business, well, at the end of the day, it's the e-commerce business. It's the backbone of the business, and that was also doing very well. So still just looking on the weekly for a weekly higher low for possible further trend continuation. So if Amazon comes back down 225, 220 region, I'm a big fan, guys, of writing some short puts. 215 down to 210. I would love buying some shares of Amazon down there. I'm not too sure if it's going to get there. All I'm saying is if it comes down a bit more, I will be playing for some premium down here. 215 down to 210, writing some short puts into that bigger level of weekly support. Because at the end of the day, if we're looking for a monthly higher low, I think that's where we might get it. 210, 215, so that's the area that I love. Moving on to Google right now. So Google also having a decent day today, 0.57%. Nothing special, still reacting nicely from our support zone, which is 192 down to about 187. Now, in the event that we are only able to muster together a lower high before breaking lower into a lower low, is it that big of a deal, guys? Not really, right? The weekly time frame is still looking okay for the bulls. If they lose this area, yes, it would be a loss of the weekly uptrend, but overall, it's not a weekly downtrend, right? Weekly downtrend would be lower high into lower low on the weekly. So far, we're not seeing that. This is just one big leg of weekly consolidation with earnings. That being said, the valuation of Google down here is very, very, very attractive, guys. 1.43 peg for a company growing revenue EPS like this, growing cloud revenue at 30% year over year with 27.5% net profit margins. It's a heck of a deal down there, especially if we come down into the lower 180s, which is why I've been favoring writing short puts in the 180 region. You can see that the bulls, for the most part, over the last, 2 years of trading, whenever we come into the 26 or lower, it's always been a very attractive opportunity to buy some Google shares. Can it dip lower between the 26 and the 50 MA? Yes, but that is where I want to be buying, guys. 180 down to about 175 is my sweet spot on Google, because at the end of the day, what are we looking for on the monthly? Just looking for a monthly higher low for further trend continuation. It's a lot harder to draw these lines with the trackpad than it is a mouse. Let me tell you guys something, right? So Google overall, big fan. Still one of my favorite bets in all of big tech right now, especially if we get that retest of 180, 175. I think it's going to be a banger trade to hold through the early stages of 2025. Moving into Meta, give me a very brief moment. I have to encourage McDonald's here in Japan, right? So, because the Japan market has been doing fairly well, and it's not my fault, I swear to God. I pump companies' bags a lot, but this one was not my fault. I just got here, right? Moving on to Meta. So Meta doing pretty good, up about 0.4%. Meta just continues on its dominance march to the upside, right? So daily uptrend, this is one single big daily leg higher. They never really lost the hourly uptrend at all. This was one big drop from the DeepSeek event, but they never really closed an hourly candle below. So we can't say that this is a loss of an hourly uptrend. They're just riding the heck out of this 12 EMA. How do you know when the move to the upside is done? Well, just watch what they've been riding. And if they lose that, right, hourly downtrend and loss of the 12 EMA, then you will know daily consolidation is underway, and we're going to be looking for a higher low. Anything above 604, looking for a higher low for possible further trend continuation. And even if we pull back too much, guys, and set the daily downtrend on Meta, is it that big of a deal? We know there's daily overbought conditions right now. I don't know if you can see it or not because I can't see my recording software, but here you go. Daily overbought conditions. Sorry if my big head was in the way. What are we looking for if daily downtrend happens, guys? You're just looking for a weekly higher low. Look at all of this space that the bulls have for a weekly higher low, guys. Anything pretty much above 590. Looking for a weekly higher low for further trend continuation. Where would I be a fan of adding a little bit of Meta? If we can retest the 12 EMA. Look, they've been just grinding this 12 EMA right now for like 6 months at this point. If we pull back here, 650 down to 640, big fan of bidding that region, but I will not be chasing Meta all the way up here. I think the company is going to do fantastic this year, and I'm very happy with my long-term shares. But would I be adding any more up here? No. But let's say I had to start a new portfolio today. Would I be comfortable buying Meta here? Yes, but not full size. If I had like $2,000 to buy into Meta, maybe I put in $500 here and I wait for a little bit of a dip. If it doesn't come, I just go on a bi-weekly or tri-weekly basis. I buy here, wait 2-3 weeks, buy 500 more, etc., etc. Just dollar cost average into the position. If you're going to be buying Meta with every paycheck for the next 2-3 years, then you don't even have to worry about what I'm saying, right? But overall, if we're looking to swing trade this one, kind of want to wait for a pullback, guys. It's not my style to buy things at the all-time highs, especially in daily overbought conditions. Moving into Microsoft right now. So Microsoft continues to be just range-bound for the most part, as they have been for about a year, about 14 months at this point of just range-bound action on Microsoft. Reacting nicely above our support zone 405 to about 390. Big fan. If we come down into here, guys, I'm a big fan of buying Microsoft, whether that's call debit spreads, leap call contracts for June 2026 as well, or just writing short puts if you have the buying power for it. Big fan of Microsoft. Matter of fact, this is the one that I've been playing the most heavy in both of my accounts. The trading account that I show you guys on YouTube, but also my high six-figure account as well. I've been writing a ton of Microsoft and making a lot of money in premium in the process. So that being said, no trend right now. The bulls are still looking for a recapture of the daily uptrend. If you break the lows, well, just going into daily downtrend, and we look to support to really start reacting in a very consistent manner. That being said, the bulls need to start everything from scratch. Set the higher lows, give us the higher highs, and then see how we deal with this resistance area. You need a very heavy bounce on the weekly time frame as well, because you can see the weekly here, it's just been range bound for the most part, right? Just very, very, very tightening range. You can argue that this is a weekly downtrend, but is it really, or is it just some form of very wide range of consolidation? Very wide range of consolidation, right? So the bulls need to start everything from scratch, need to get a nice weekly push to the upside, set a higher low, and then move for the break. But overall, I'm a big fan of playing ranges, especially when you're using short puts to get some very attractive premium. Now, moving on further to Netflix, fantastic company, by the way, Microsoft. Moving on to Netflix now. Netflix just continues pushing and grinding on higher. Daily uptrend is clear as day right now. Any drop, just going to be looking for a higher low. Anything above 965, looking for a daily higher low for possible further trend continuation. Where are we going to come back into? Well, just look where we broke out from. All of these range resistance highs in this location, which is roughly about, let's call it roughly 990. Well, if we get a pullback, probably that is going to be the first stop, and it does line up with the 12 EMA as well. Maybe just looking for some trend continuation. However, if we lose this and set up a daily downtrend, is it the end for Netflix? Are we going to zero? No, probably not. The weekly uptrend is extremely healthy right now, guys. You can see that clear as day. Beautiful weekly uptrend. Any pullback on the weekly, just looking for a weekly higher low for further trend continuation. And if we pull back for a few weeks of time, I'm a big fan of waiting for this trade, guys. This is a breakout, retest, and run on a weekly time frame. Similar to the retest that happened right here, you want to line it up with previous resistance, which is now support, and the confluence with the 12 EMA on the weekly time frame. This range is 940 down to about 900. Big fan of throwing in some bids on Netflix for some short-term trades, but in terms of long-term shares, I'm not selling any of them. Love this company to death. Moving on to NVIDIA right now. So NVIDIA up 2.87% on the day. They were up at 1.3% on the day, and you can see that the MACD on the daily is showing that the bulls are regaining a lot of momentum. That being said, this was a daily downtrend. We now have a big engulfing move. So even though we're coming into resistance, which is 135 to about 130, and we may get rejected here as a matter of fact, well, we have a lot of space off the lows. Anything above 113 is going to be looking for a daily higher low and maybe get the daily uptrend shift. If they cannot break this resistance in one clean shot, we are looking for the two-step stage of recovery process. So all in all, not looking bad on NVIDIA. And as a matter of fact, if we do get some downswings from here, I will once again be a very big fan of doing exactly what I have been doing on NVIDIA, writing short puts under the market. My target zone for those is going to be 120 down about 115, this lower range of support, which we can see that has been an actionable area for the bulls quite a few times in most recent area history, and even lower, guys. If for some which reason, right, we come still further down on NVIDIA, down below 115, I'm a huge fan of going shopping at the 105 to 100 range. So this is my half size on NVIDIA. If we go down there, I'll buy, but if we come down here somehow, I will buy very heavy on this stock. But all in all, the price action is not looking too bad, but we do need to reset that structure and deal with this resistance, right? The best case scenario for the bulls is mount this resistance range higher, set the higher low, using it as support. The same thing the bulls did all through here, using that range as support. This is what you want to see. This would be a nice breakout, retest, and run. This retest trade could be a very interesting trade for a trend continuation if you're looking for some shorter term contracts like call debit spreads with like 60, 90 days worth of time, something like that, leading into earnings. Now moving into Tesla down about 3%. There was a report that came out over the weekend saying that sales of the Tesla brand overall were down. The brand perception towards the brand is also quite negative right now, all surrounding Elon Musk's personality. So apparently Elon Musk is alienating some of his customer base, and people are just not finding that Teslas are all that popular. Now take from that article what you will. They also did a survey. The sample size of the survey was not that much, but I think we can see right here, I don't know if the article is over there, guys. Tesla stock, no, it's not here. I'll try to bring it up. I should have brought it up, guys. My bad for that. But there's an article out there that's going around saying EV sales, not just for Tesla, but overall in the industry, but more specifically to Tesla, are down. China EV sales are down and Tesla sales are down. Europe as well is not doing as well as it has been in the last few years. And even sales in North America are starting to decline a little bit, which is not good for a stock right now that is trading at a very, very, very rich valuation, in my opinion, right? They're trading very high. Well, at least they were almost at a 5-6 peg right now. You are pricing in a ton of growth for the future. And unfortunately, Tesla will not have that robo-taxi to supplement its sales much, at least before the next 12 to 18 months, at least not at scale. That being said, in terms of the technicals, guys, clear breakdown of the support range. We were paying special attention to whether or not the bulls could hold this range. And I told you guys, if we break and close below this, as we did on Friday, we are probably coming right back down to the 350 range, which was back here. And that is exactly what happened. The price action never lies, guys, right? Daily downtrend is underway. And what else is underway is a big weekly downtrend. When you see a weekly downtrend, guys, it is very, very difficult to just V-shape this as if nothing happened. Usually it takes a two-step process of recovery. That being said, weekly downtrend is synonymous with monthly consolidation. When you pull out this chart on the monthly, it'll make a lot more sense. Tesla's used to doing this. It does it all the time, right? Huge rallies, then monthly consolidation, then huge rallies. This time again, possibly looking for a monthly higher low at this point, and this point, anything above 183. It's been a very nice last 6 months of only straight up. Now looking for a monthly higher low for further trend continuation. Where do I think we might be heading if we do not hold the 350 to 330 and Tesla continues getting played with negative headlines? Guys, in all reality, if you look at the monthly, we are probably heading right back to the $310 to $300 level. That is all the way down there and would be confluence with the 12 monthly EMA. Just look at this structure right here. Big breakout, test of the 12. Big breakout, not quite test of the 12, but close. Big breakout, where do we come back to? Test of the 12 monthly EMA. So I would not be surprised if we do retest this monthly 12, find a base of support, and then we can reevaluate whether or not there's a trade there. Am I trading Tesla myself? Well, I am, but writing short puts way, way, way under the market. I'll be writing a little bit down here around the 200-day moving average and horizontal support, 310 down to $300 once again. And that is pretty much the analysis on Tesla. Now moving into Palantir, just a few more. Palantir up about 5.23%. Palantir just does not slow down here, guys, at all. Looking absolutely fantastic, but it's very tough to buy this one up here. Valuation, daily overbought conditions has ran an absolute ton. I mean, everything tells us not to buy this stock, right? But I cannot control you guys. If you're having FOMO, if you're feeling the hype, if you want to buy it here, it's not my money, right? I have my Palantir shares from $11, $12. I'm holding them. I'm not buying more. As a matter of fact, I sold 200 more shares after earnings. We've made a ton of money on this one this year. It's not the time to get overly greedy, in my opinion. That being said, the bulls are in absolute full control right now, looking like a very clean sweep. If you're looking for a higher low, guys, anything at this point above pretty much the after earnings candle, 99.7, just looking for a higher low for further trend continuation. And even if we give it all back and set up the daily downtrend, the bulls on the weekly have an absolute ton of space. We would just be looking for a weekly higher low for possible further trend continuation. Anything above 64, just looking for that higher low for eventual trend continuation. I do not like buying it up here, guys. Wait. Same as Tesla. Big move up, test of the 12 on the weekly. Big move up, test of the 12 on the weekly. Big move higher, test of the 12 on the weekly, and then run. So what I'm saying is wait for the 12 to start catching up. We wait for the pullback, and if we want to take a big trade with some decent size, that is when I would commit if we want to play Palantir to the upside. I'm not saying if it's a good idea or not. I'm just saying if we wanted to play Palantir, that is how I would be looking to play it. But all in all, congratulations to all Palantir bulls out there. You guys have probably made a ton of money. Just don't get overly greedy. Secure those profits either with just selling the shares or covered calls is always a good option too. And now lastly, SOFI. So SOFI is, well, just consolidation, right? Consolidation into support zone, which is 16 down to about $14. This support range was previously established back here in 2021. You can see bottom end of that support range. The bulls are trying to do the exact same thing here and reacting nicely from the 12 EMA on that weekly time frame. That being said, no clear directional structure. It is a technical daily downtrend right now. Lower high, might be looking for lower low. Not too sure if we're going to get it or not. But all in all, it's just somewhat a very wide range of accumulation, right? They try to go for the breakout. They didn't get it. Now we're back in consolidation phase. The time frames that make the most sense for me are the weekly. It is still an attempt at a weekly uptrend shift, higher lows, and go for the higher high shift. However, the other time frame that makes the most sense is just the monthly time frame, guys. We ran an absolute ton the last 4 or 5 months looking for a monthly higher low for possible further monthly expansion. So if SOFI chooses to continue to consolidate in these levels, I'm a very big fan of writing some short puts either at 14 for a first entry and then DCAing $13 and $12 if we get there. Why? Because we'd just always be looking for that monthly higher low for further trend continuation, and the 12 EMA is going to be curling up into there, and we might just be able to get that bottoming out process and time it for a little bit of a rally. I think SOFI has a good chance of hitting $18 to $20 this year, and I will be positioning accordingly. I already have some calls right now that are slightly underwater, but I will be looking to accumulate the shares, and as a result, I will be writing short puts under the market to accumulate those shares as we move lower. But overall, SOFI is still holding support. I would not say there's any major red flags on this chart overall. And that is pretty much everything. I mean, special shout out to a few other stocks that have been moving a lot higher. Uber looking very good, but coming into resistance, 80 down to 78. I was telling you guys that I was a big fan of buying here. I bought my leap options there, and a lot of our members are up 100% plus on those leaps, looking very good. Even people in shares are up fantastically. It was a no-brainer buying opportunity, especially at this valuation in the lower 60s, guys. It was a no-brainer. Right now, Uber looking very good on the weekly uptrend, but coming into resistance. Can we maybe get rejected, see a higher low, and further trend appreciation? Sure, absolutely. You know, Uber is looking absolutely fantastic for that one. But overall, those are just a few of the trades that I've been looking at that you guys have seen in my account that I've played. So overall, very happy with that. Another special shout out to stocks like Nike. I mean, Nike is up 3.29% today. I think it's the time, guys. I started positioning in Nike just this week. I'll show you that in a few short moments. But big support coming in down here from 2018, guys. I think Nike's finally ready. They had an execution problem. They recognized the execution problem. They're now focusing back on innovation, technology in the shoes, and going back to basics. A lot of sponsorships with athletes and professional sports divisions and whatnot. I think they now have a very much a better CEO than they used to have. They've acknowledged the problems that they have. So I'm willing to give Nike a chance, especially at 2018 prices. I've been looking for $70 or a break of 70 for a while. So when it does happen, I'm going to put my money to work, especially around the 200 monthly EMA, guys. That does not happen often on Nike. The last time they touched the 200 monthly EMA was all the way back in the Great Recession of 2008. So I'm willing to give Nike a chance, which is why I've been bidding down here, but it might take a while to recover, but I'm still willing to bid here while prices are good. Also, special shout out to Elf Beauty. We were in Elf Beauty. We got into this one after earnings. I bought 200 shares for my long-term portfolio at 66. I'm up nicely on those. I'm not saying it's the absolute bottom, but I'm definitely willing to bid on Elf Beauty right now because Elf Beauty's valuation is just very, very, very attractive. It's right now under a 1 peg. I'm willing to give the company a chance. 24 quarters of 20% sales growth, fantastic. We covered their earnings last week. I think it was an overreaction, but overall, looking fairly good. I mean, weekly is deeply oversold conditions. Daily is deeply oversold conditions. So can we throw in a bid? Yes. So I have some in my trading account as well, and I'll show you that position in just a few short moments. But looking for ELF for a little bit of a bid here for a longer term swing, I am a very big fan of playing this one overall too. So those are just a few of the trades that I'm currently looking at or in right now. Special shout out to those. Now let's take a brief look at my portfolio for the trades that I've made today, some that I've closed, and which ones I have remaining into the rest of the week. All right, so looking at the portfolio, before I go through the trades that we still do have, one of the trades that you may have noticed that I've closed is BITX. I played BITX after the big drop last Monday, and we got the 35 short puts on BITX. This would have been Bitcoin at like 75,000. It was such an easy trade to make. We got about 55 cents opening that trade, which was over, about 1.5% for about 3 weeks worth of time, which is my minimum. 0.5% per week. And now, just one short week later, we were able to close these for more than 50% profits. No sense me keeping this trade for 2 more weeks. These were a February 21 contract. If I can see over 50% in a week, why would I hold it for the remainder 2 weeks? I would rather take that buying power back, and if Bitcoin drops again, I will just write these options again, quite simply. So that is one that was closed. Also, since we didn't do a Friday recap, here are the trades that were made last week, open and closed. Only one little NVIDIA wheel trade on the Monday session. We closed that for a 70% win. The 105s, as I tell you guys, I'm bidding NVIDIA, guys. 105 to 115. I will write those short puts all day. We had a lot of earnings trades as well, most of which went very well. The ones that did not go so well were Pepsi and PayPal, but you can see we closed them for a very tiny loss, $15 per contract on Pepsi and only $7 loss per contract on PayPal. So last week was fairly light in terms of the wheel trades. No directional trades were closed either. Fairly light week because I was traveling on Friday as well, and I loaded up the account with longer duration puts. You guys are used to seeing me do the weekly wheel puts, but a lot of you guys ask me, do you also do longer dated puts like 2, 3, 4 weeks of time? And the answer is yes. And here is where most of my buying power is, in fact. So let me just show you the account. This is the YouTube account. We started it 2 years ago at this point, and at the time I had put right about $100,000 into it, and I ran that for about 2 years. You guys saw me make 75% in 2023 using mostly the wheel strategy and certain selective call option strategies such as call debit spreads and leap call contracts. 75% ROI in 2023 and 65% ROI on the channel last year as well. But a lot of people said, well, you know, $100,000 is a little bit too much. It's tough to relate to for a lot of traders out there. So I cut it in half this year. I started off the year with just about $46,000. And you can see so far since the inception of, well, since the start of January, right now we're still protecting gains here, about 7.37. The high of the year was about 11% a few short weeks ago, but we are outperforming the indexes by a wide margin. The NASDAQ is only up about let's call it 2% this year after today's trade, and the S&P as well is only up about 2%. So us being up 7.37, can't complain about that at all. Now, in terms of the positions, you'll see, guys, some of these positions, right, are longer dated contracts. So we wrote one new one today, which is ARCG, which was the February 14th, 25 put. I like ARCG a lot in that lower range, guys. I think it's the AI trade that nobody talks about. This is biotech. This is DNA sequencing and cure medicine, right? They're using AI and using genomics and DNA editing procedures to find cures for long-standing diseases like Alzheimer's, Parkinson's, AIDS, cancer, things like that. AI is making tremendous breakthroughs in the medical field and medical sciences, and I think this is a very underappreciated trade. So I'm willing to get some shares here at 25. So as a result, I have positioned with one little contract. I'll add into it maybe up to 2 contracts or something like that. I also have some leap call options on this very same position. I'm very happy with this trade. And overall, I will be seeing it through. It may take some time, but I think the next 6 to 12 months, this industry could have a very good chance of starting to blow up. Oh, by the way, speaking of those longer dated puts that I showed you guys, or that I was talking to you guys about, here's one that actually closed today. We took these AMDs, slightly after earnings, and we wrote just last week, right? We wrote the $100 puts for $2. The trade was taken right above here, right? And I said, do not take this play if you don't like the stock, because some people don't like AMD, right? So we wrote the $100 puts for $2 March 7th. Now, 1 week later, with a 1 month time on the contract, yeah, we closed them for 50%. Why would I hold the remainder of 50% for a month? It doesn't make sense. You take the buying power back and you go looking for other opportunities with full ROI in the contract. If AMD drops again, I will take this exact same trade again and just continue doing it over and over. But I'm very happy in that 1 week, we've made 50% per contract. Very nice. So that is a way that I use long form contracts. And when the stock bounces, you get to pull forward a ton of premium. Other notable contracts that I still have, number one here is we got assigned Elf Beauty last week at 71 after their earnings. And you can see what I did today is I wrote long form call options March 21st over a month of time. Look how much money I got for them, guys. $5.30, 75 calls. Usually you see me right at the money when I get assigned, or rather at my strike price of 71. I got a little bit greedy on this one because Elf is just crushed right now, and I just reduced my cost basis by a full $5.30. So if I get called away in a month of time at 75, that means that I'm selling them at 75 plus $5. So let's call it I'm selling them at 80 bucks roughly. My entry cost is 71. So all in all, I'll be making close to about $900, $950 with all premium received. I'd be very happy with that ROI. So I locked it in, guys. This is about 1.5% per week for the next 5 weeks. Respects my minimums, so I take the trade. Now I don't even have to think about it. If ELF drops, no problem at all. These covered calls reduce my cost basis, and I will be DCAing into ELF if it comes into the $50 range. Other than that, we still have all the other plays We still have the long form Microsofts as well, right? I have a big contract here on Microsoft. February 28th, 415 puts for almost $8. That one I am still riding overall. And the other longer dated contract that I have is the February 21st Google's 185 puts, which we got for almost $2. They are slightly underwater right now, but I do not care, guys. I want to buy Google at 180. So when I'm traveling, what I like to do is I like to write these longer dated contracts because I'm traveling. I'm not going to spend 8 hours in front of the charts every day, right? I would rather lock in my levels at very attractive prices, get my required premiums for several weeks, and just walk away and enjoy life, right? So that is why the weekly wheel trades have been fewer and far between, but overall, I do still have some, right? I wrote a Nike 69 put here for this Friday, and we got about 45 cents, which is over 0.5%, so I'm happy. Those are already profitable ever so slightly, so I'm happy on that. Those were the new additions, but you can see, guys, everything else is pretty much still here, still wheeling the SOFIs and a number of other trades. Other than that, nothing much has changed, right? Coca-Cola will be interesting to see those call options, how Coca-Cola performs tomorrow. But all in all, guys, the markup of the portfolio is almost identical to how you guys saw it last Monday. The only difference is we just continue collecting premium, right? So that is everything for the portfolio review. Overall, very decent performance. And overall, guys, I have an absolute ton of buying power that I'll just be looking to be deploying over the next few weeks if I see some attractive deals. That is really everything that I had for you guys today. If you enjoyed today's video, consider dropping a like. Would really appreciate it for the growth of the channel. Also, consider subscribing to the channel if you're new. We do these every Monday through Friday, even when I'm traveling. However, now, no Friday videos. Friday is going to be my day pretty much off to enjoy my travels. But Monday through Thursday, I will be here to guide you guys along through the markets. And if you guys have any questions, of course, consider leaving them down below. Anything you want is fair game. I'll be happy to give you my opinion on your stocks, your options, or macro, or anything you guys want overall. And lastly, if you guys are interested in receiving all of my trade alerts in real time for the wheel trades, the call option trades, these are all the earnings trades, right? These are all the trades that I've ever made since the inception of the Discord. The green check boxes are wins, little red dots are losses. So you can see here, one is far more present than the other, of course, right? So if you guys want access to all the trades, whether they're wheel trades, short puts, directional trades, calls, call debit spreads, leaps, shares, we do everything for small, medium, or even large account sizes. All the access is down below, link in the description. And also we do private morning live streams, even when I'm traveling for about an hour and a half every morning, Monday through Friday. And also, guys, if you cannot attend the live streams, they are always recorded. You can watch them after, and you can also ask me all your questions in my chat rooms here, and I'm usually very, very, very fast to answer at any point throughout the day. And as well, guys, you also get access to all my watch lists too. If you like my watch lists, and I mean the options watch list, the large account wheel watch list that I very rarely show, my high quality, high conviction watch list as well. Don't want to have to build them on your own. You can just copy paste with the click of a button, and every single stock on which I've ever done annotations for earnings or support resistance level boxes and whatnot, and all the earnings updates that I do give with the valuations, those all come with a click of a button. You just copy the chart layout and you get the whole watch list and every single annotation on the charts. So if those are some things that interest you, the link to the Discord is always down below. And if not, well, I guess I'll see you back on the channel, guys. Pleasure as always. I did a big Monday update because I haven't seen you guys in a while, but moving forward, the remainder of the videos this week will be a little bit shorter than we're usually used to. So hopefully you guys enjoyed this longer form update, and that's pretty much it for me. Take care. Hope you guys are enjoying your day. That's it for me. Peace.